This is how one of my mentees passed 300k in FTMO challenges. She joined us 1 year ago, already had multiple payouts, but this time she passed 300k FTMO challenges in a row without failing a single one, showcasing consistency everyone should be aiming for. I'll spend the first half of this video talking about her performance and give you some tips and tricks on perform challenges, and in the second half of the video I'm gonna show you the traits that she took to pass her phase 2. So let's check her equity curve. As you can see, she's really consistent. She is not passing the challenge with one single trait. If you look closely here, she had like 7-8 winning traits. She risked less than 1%. That's what I advise all my students. And you can see her win ratio is really good. She had more wins than losses, obviously. And every win seems way bigger than her losses. So we can check her statistics to confirm that. Here we can see she had 53% win ratio and 1-to-4 risk to reward ratio, which is really healthy statistics. As long as you keep your win ratio above 50, it's really healthy. You are less probable to have psychological problems. 1-to-4 risk to reward is abnormal, above average. So her average loss was 0.25%, which is really good risk, and her average profit was 1%. So it seems like she had more than 10 winning trades. Now we can see her second phase equity curve, which was a bit faster. She only took 3 trades. One trade was cut short here. It was a winning one, one little loss, and one big win that passed her challenge. We can see here her win ratio was around 40%. Her average RR was 20, which is abnormal, right? Oh, and the loss was probably just a break-even. So yeah, when I saw these challenges, I thought it can be a lesson to many of you. The point of this video is to show you that you don't have to gamble to make it. You know, I've seen many gurus out there promote gambling, advising you to risk 2% just for the sake of passing the challenge and maybe getting a payout. Basically trying to gamify the prop firm system, but it's actively damaging the trading space. Some gurus promote this type of trading because they rely on the variability of outcomes, hoping that few people hit a lucky big payout, which they can use then as marketing material for their course. But most of the traders who made 5 or 6 figures in payouts with this method lost it in the long run, because it's just gambling, it's not consistent trading. The goal is to be consistent in trading and then earn, not try to earn while getting consistent in trading. If you try to do that, you'll build bad habits like revenge trading, over trading, you'll lose confidence, you'll start doubting your strategies, and your focus will not be on your performance, but on the return, on the payout, right? And that's not what you want. So the first tip that I can give you is to buy a challenge when you're ready. You have to do your own due diligence. You have to get statistics, data that prove that you have an edge, that you can pass the challenge, right? So you don't have doubts or any psychological problems in future during the challenge. And you also want to have some financial buffer. You don't want to spend your last money on a challenge. Then you have financial pressure, and this can cause, again, more mental problems, more psychological problems. Second tip that I can give you is to not focus on the outcome. You are taking a challenge to test your skills. Your goal when you buy a challenge should not be passing the challenge and getting a payout, but just to see how well you're doing in trading. If you're doing well and you're consistent enough and you deserve it, you will pass the challenge, you will get funded, and you will get a payout eventually. You should not worry about that. The third tip that I think will benefit most of you is to not over-risk. This depends on your own trading statistics, on your own edge. If someone has higher win ratio, then they can risk 1%, right? If someone has lower win ratio, they have a higher chance of getting a 10 loss streak, so they should risk 0.5% or maybe 0.4. But I would say the highest risk you should allow yourself is 1%. Anything above that is gambling. And the last tip I can give you is to be aware of your mental state. For example, when you pass a phase 1 of your challenge, most people tend to be excited, right? Let's say they have to wait 3 days to get their phase 2. And now in those 3 days, they're just getting excited, thinking about how they're going to pass the challenge. But if you find yourself in these mental states, then you should take a break. You should start trading when you don't feel anything at all. Because, for example, in those 3 days when you're excited, you're very likely to build a lot of FOMO. You don't even realize that, but the moment you get in the market and you get the credentials of second phase, you will enter the first trade that seems valid just to, get closer to the goal or even past the challenge. But that's not what you should be doing. You should be trading with the clearest mental state you can have. This is how she passed her challenge. This was her phase 1. She took one of those trades, few of those trades that I broke down in the last YouTube video. If you wanna see, check it out. But I'm not gonna break it down again. And these are the trades that she took in her phase 2. So the first trade looks funny. It's like a 1-to-1 risk to reward. But here she messaged me that she was really confused or skeptical about the trade. And she only took it because, as I mentioned before, you can get excited, right? So she just got her phase 2, she got excited and entered the first trade that seemed valid to her. But I told her, you should just close it, she should just close it and, take the best, take another hyperbole trade that she sees when she is thinking rationally. So she closed it here at 1-to-1, waited a bit. So this is like 3 hours. She took a 3 hours break and then saw this second trade right here, which was a loss. I think the trade was like this. What happened here? We were in consolidation on Euro USD. Here the high took this strong high on the left on buy side, and here we broke down. We took out sell side. Oh no, we didn't take out sell side, my bad. So here we only saw this. We saw that this was an SMT, a smart money trap, or just a retail trap. Why is it a trap? Well, there's no specific reason to it, but let's just say in consolidations, you don't really trade mitigations. You want to trade liquidity sweeps. So, for example, if price goes up, you don't trade this mitigation, right? You want to trade a sweep of this or maybe this. The same goes for this one. You don't want to take a mitigation and buy from it, but if you want to buy, you want to take a trade below it. So for that reason, we are naturally targeting the structural points. And this is what she saw. She saw a reaction to an SMT, to a smart money trap. She saw this mini structure right here and this little liquidity sweep. So she executed this trade right here. But unfortunately, it was a stop loss. And then after that, she took a 1 hour, 2 hour break, and she entered the same trade right here. So we have a smart money trap. Again, we broke structure to the downside. We're giving a fake break of structure to the upside, right? And we are also mitigating this hidden base right here, this supply zone right here. So she's trading my strategy, right? This is like a 1 hour pattern. She waited for 1 hour candle close. I think it was 1 hour candle close. Oh yeah. So it rejected twice on 1 hour. And then you just put a limit like this, stop loss above the highs, TP on the low. And you have a really, really nice 1-to-5 trade, just like that. So you get tagged. Oh, this was spread hours. So you execute a trade after that. And you have a really clean 1-to-5, 1-to-4, 1-to-5 trade. And this is all it takes for you to pass the challenge. It doesn't matter that she missed this one. It wouldn't even matter if she missed like the next 5 winning trades, right? But she would pass it eventually. And that's what matters. So I hope this video will help some of you, at least. It took me 5 hours to record it. If you want to see more trading content, then follow me on IG. And we're Gucci. See you next time.